Are you looking for financial independence calculators? Look no more, we got you covered. All right, so what kind of financial independence calculator should you be using? Should it be a retirement calculator? Are there some other calculators that could be better? I can tell you, yes, there are, and I'll even save my favorite calculator for last too. Be sure to watch this video to find out what they are and what could be best for you. Okay, so you're probably looking for these different calculators or whatever, and you just happen to pop on my video here, because honestly, that's why we're doing this. Because apparently a lot of you guys are asking, where are these financial independence calculators? Most of the time, you're gonna be finding retirement calculators, right? And they'll say things like, how much money are you starting with? How much are you gonna add per month or per year? What's the interest rate you're gonna earn? For how long you're gonna invest it? And if they're, as a bonus, they might throw in what's the inflation rate, right? And then from all of that, they're gonna spit out a number, and you say, cool. Does that mean I'm financially independent yet? The answer is, who knows, right? Because how can you tell? Because it doesn't really answer financial independence. It says, here's your end number, right? Now, some of them will give you things like with that after inflation adjustment, it'll say, well, here's what it really looks like. So for example, like I was showing somebody like, 30 years, you invest your money for this long, right? Like, what does it look like? And it's like, whoa, look at that. You've got hundreds of thousands of dollars. But after inflation, especially if I put in a certain number, it's like, oh, it's like 88,000 bucks. Well, that's not exciting. You can't do much with that, right? So that's where you gotta really look for the reality. Now, if you're gonna use these retirement calculators, let me give you a few tips of advice on what to do here. If you're investing in the stock market, specifically if you're investing in mutual funds, here are the numbers that I would put in based on real evidence. And this is something that I've been perfecting over the years, right? It's like, what's the real return of the stock market? Because the average return versus the actual are two very different things. Plus 85% of mutual funds never even get stock market returns. So your better bet, I know a lot of people now, it's becoming popular, they're going for the S&P 500. But now the S&P 500, guess what? Literally 6 companies, 7 stocks, but 6 companies, literally those 6 companies dominate 1/3 of that index. You're not even diversified. Like if tech goes under, you lose a lot of money. This is what happened to my dad, by the way. The reason why he kind of fell behind a little bit going into the mid-2000s was because in 1999, he was hearing about all of his coworkers investing in tech, in these tech kind of companies. So he decided to move his money more into tech companies because they were getting better returns. What happened was Y2K, tech tanked. Now, he didn't lose everything. That didn't happen at all, right? He was a good saver. He pumped a lot of money in, but that didn't help him at all. He was trying to recover for years after that happened, because he was just gambling, right? S&P 500, same thing, so be aware. But going back to the financial calculator, what number should you be using? Just so you know, the average of the 30-year average of the S&P 500, this is a compounding average, not the simple average and things like that. Compounding average is about 8.74% as of February 2025. So it's under 9%. This is the highest I've ever seen it in 20 years I've tracked it. Usually it's between 7 and 8%. So I would say if you're gonna be conservative, because they guess that the next 10 years, is going to be between 2.8 and 4.8%, way less. So I would put in 8%. For inflation, I would put in at least 4 or 5%. The truth is it's probably closer to 7, but it depresses you too much if you're investing in mutual funds to have 7% inflation. So not to depress you completely and give you a little bit of hope, even though it won't be much, you'll find out why, then you put that number in. Now, financial independence. This is where you have to determine what is it you're spending per month. Right? For financial independence, this is my definition, is that you have enough income coming in from your investments to pay for your monthly bills. So if you're spending $6,000 a month in today's dollars, that $6,000 a month is $72,000 a year. You need to have enough money coming in to do that. Well, what's the return you expect from mutual funds? Depending on when you actually retire, this number can change. If you're trying to retire in your early to mid 60s, the number should be about 3%. So that means if you want $72,000 a year, $6,000 a month, you need to have at least 30 times that amount, which means you got to have closer to about 2.2 million or so per year that you're living on. Even 2.2 million at 6% or at 3% is 66,000 a year. So it might be close to like 2.3 million to get to that, or 2.4 million would actually get you to that 72,000 or $6,000 a month. 2.4 million you got to have saved up by then. But guess what? There's inflation, right? About every 12 to 15 years, inflation doubles. So if you want 6,000 a month today, and you're trying to keep up with inflation, that means if you need to get 2.4 million today, you got to get to 4.8 million in about 15 years. Again, that can vary. It could be sooner or later. It just depends, right? But like I said, about every 12 to 15 years, I'm being conservative, is when you see most lifestyle and prices double. So that means now you're, of course, in this spot. You're like, I don't know if I want that, right? This doesn't seem great for me. Well, you're right, it isn't. It's not great at all. So that's where, again, we need to make sure we're planning for it the right way. Now, what's the other alternative? Financial independence. Can you create it better? Well, yeah, you could. I like simple math because I'm kind of, yes, I got great test scores and everything and whatnot and good grades, but the truth is I love simplicity. I think simplicity is great because it helps you be able to take the right action. You'll find out, you start putting in those numbers in for retirement and trying to live on 3% of that after inflation adjustment, you'll get kind of depressed. You'll realize that whatever you're saving in IRAs and 401ks is about what you live on per year. If you're saving $20,000 a year in your 401k, you'll probably live on about $20,000 to $30,000 a year from your 401k if you want it to last forever. I like income that comes in right now. Not theoretical, but guaranteed. This is why I do real estate investing. But I don't have to be the active investor. I don't have to be the genius that does all this stuff. What I do instead is I invest with the real estate investors that are the geniuses. So I put my money with them. I either go in on deals and go in together as a part owner. And maybe I'm buying into apartment complex or self-storage units. Maybe I'm buying into oil and gas. Maybe I'm buying into raw land and things like that, which I have a raw land deal that is doing awesome as a partnership. We put in over $500,000. It's kicking out over $13,000 a month, right? We've got other things too, like maybe I buy properties, but somebody else manages the property for me and I get to take the profits. Do you know I have a property that I bought in Tennessee just less than 7 years ago that's kicked off about a 400% return for me between the cash flow and the appreciation. Please show me a financial advisor that said they'll give you 400% in 6 years or 7 years. It's just not there, right? So, but again, is it guaranteed? No, of course not. But I'll tell you, if there's anybody who's become accidental millionaires, it's people that have real estate investing, right? I joked with somebody in California, I said, man, how many of you guys wish you just bought one property in 1986? And they're all like, yes, of course, because they know a couple $100,000 property is now worth a couple $1 million property. That's not always the case with the stock market. People don't see that kind of growth usually in 40 years. Is it possible? Yes. Is it likely? No. That's the issue we run into every single time, right? And for some of those people, it'd be way more than 10 times. Plus they get other things too. If they get rent and everything else, they're getting income. That's the thing, it's all about income. So if you want a financial independence calculator, you need one that shows you income, not for you to have to figure out how much money you have to accumulate. Instead, what can I actually do to generate income now? Best way to do that, I've got a financial calculator on our website at moneyripples.com called the Passive Income Calculator. Free to use, totally free to use, calculator to use, but it'll tell you pretty accurately, especially if you do alternative investments like real estate investing, within 12 months, how much passive income could you create in your current situation? It might blow your mind. So go to moneyripples.com and see what your number is today.